Here is the number that matters this morning. The euro is holding near 1.166 against the US dollar, having touched 3-month highs above 1.1700 just 2 days ago. This is not a quiet summer drift. Markets now put a 96% probability on a European Central Bank rate hike in September, taking the deposit rate from 2.25 to 2.5%. The engine behind this move is not only European strength. U.S. Treasury market turmoil and softer American economic data have forced investors to rethink the dollar. Against that backdrop, BNY says the ECB's tightening outlook is providing genuine support for the single currency. Over the past week, the story has shifted from patience to active tightening. In July, the ECB held rates, describing a data-dependent, meeting-by-meeting approach. Then on the 26th of August, Executive Board member Isabel Schnabel warned that further rate hikes will be necessary because inflation risks remain tilted to the upside and euro area growth is more resilient than expected. July's Eurozone inflation accelerated to 2.9%, while energy inflation jumped to 10% year-on-year. Even core inflation sits at 2.5%. Schnabel stressed that waiting for energy pressures to feed into wages could lead the ECB behind the curve and force more aggressive tightening later. That is the core tension. The immediate impact is that the euro is doing some of the ECB's work. A stronger exchange rate lowers import costs and tightens financial conditions without the central bank doing anything. BNY's Jeff Yu puts it bluntly, activity is improving, but tightening too early would be a mistake, and the euro near cyclical highs is already helping. That is why BNY's latest targets are so revealing. They still expect euro to US dollar to fall to 1.12 over 3 months and 1.15 over 12 months, up from previous targets of 1.05. In other words, BNY has turned less bearish on the euro, but still sees a potential 4% pullback from current levels. Looking ahead, the September meeting is now a near certainty, with a 25 basis point hike to 2.5% priced at 96% probability. The bigger question is the signal after that. Sources suggest there is little appetite to promise further tightening beyond September. That leaves the euro vulnerable. If the ECB hikes but refuses to signal more, the move could be a classic sell the fact. Energy risks add another layer. Gas storage levels are low, and President Christine Lagarde has warned that Europe's old growth model is eroding, leaving the region more dependent on domestic demand. For the euro, the path from 1.17 to 1.12 depends on whether US data stabilizes. The takeaway is clear. The euro is not simply rising, it is being pushed by a dollar under pressure and an ECB that feels compelled to act. The 1.17 level has been tested, while the 30-day low of 1.1369 marks the immediate downside reference. BNY's target of 1.12 for 3 months is a reminder that momentum can fade quickly. Watch the September meeting not just for the hike, but for whether the ECB says done or more to come. That single word choice will decide whether this euro rally extends or rolls over. If you trade or travel, that is your signal.